China operates as an upper-middle-income, developing nation with a mixed socialist market economy, incorporating industrial policies and strategic five-year plans. It ranks as the world's second-largest economy by nominal GDP, following the United States, and has held the title of the largest economy since 2016 when measured by purchasing power parity, PPP. However, due to volatile currency exchange rates, China's GDP, when measured in dollars, experiences sharp fluctuations. Accounting for approximately 19% of the global economy in PPP terms and around 18% in nominal terms in 2022, China has historically held significant economic power, dominating global trade for much of the past 2 millennia. Its economic landscape includes public sector enterprises, state-owned enterprises, SOEs, mixed ownership enterprises, a sizable domestic private sector, and openness to foreign businesses. While private investment and exports serve as primary drivers of economic growth, the Chinese government has increasingly focused on promoting domestic consumption. China's economy is characterized by a blend of government control and market forces. It operates within a mixed market framework where socialist principles intersect with market mechanisms. The government plays a significant role in setting policies and owning major companies, known as state-owned enterprises, SOEs, while also fostering a thriving private sector. For decades, China's economic growth was fueled by exports and manufacturing, earning it the reputation of being the world's factory. However, there's been a shift towards prioritizing domestic consumption to drive future growth, aiming to stimulate spending within the country's large population. The government shapes economic direction through five-year plans, which set goals and priorities influencing resource allocation and investment. Industrial policies further support specific industries deemed strategically important, aiding their global competitiveness. A vibrant private sector drives entrepreneurship and innovation, coexisting alongside state-owned enterprises. China actively welcomes foreign investment, leveraging external capital and expertise to enhance various sectors. Nevertheless, China faces challenges such as slowing growth, attributed to factors like an aging population and real estate crises. Income inequality is also a pressing issue, with a significant wealth gap between different segments of the population. Since the economic reforms of 1978, China has sustained an average GDP growth rate exceeding 10% annually for over 3 decades, with certain years seeing growth rates surpassing 13%. However, in recent years, growth has decelerated notably. China stands as the world's largest manufacturing economy and exporter of goods, while also emerging as the fastest-growing consumer market and second-largest importer of goods globally. Additionally, it leads in consumption of numerous commodities, accounting for roughly half of global metal consumption. Despite its prominence in goods trade, China remains a net importer of services. As of 2020, China was the largest recipient of foreign direct investment globally, though recent trends indicate a sharp decline in FDI. It also ranks second in outward foreign direct investment. However, income and wealth inequality persist as significant challenges, with China hosting the second highest number of billionaires and millionaires globally. China boasts the world's largest foreign exchange reserves, valued at $3.1 trillion, with potential for greater valuation when factoring in the foreign assets of its state-owned commercial banks. While it faced a mild slowdown during the 2007 to 2008 financial crisis, recent economic challenges, including a real estate crisis and demographic shifts, have contributed to a deceleration in growth. With a labor force of 791 million in 2021, China holds the world's largest workforce. It ranks prominently in innovation, financial assets, and technological advancement, with significant investments in 5G technology. Furthermore, China maintains extensive trade agreements and is considered a manufacturing powerhouse, hosting a considerable number of the world's largest companies and financial centers. Throughout much of its history spanning 2 millennia from the 1st to the 19th century, China stood as a dominant economic force globally, contributing around 1/4 of the global GDP until the late 1700s and approximately 1/3 by 1820, coinciding with the onset of the Industrial Revolution in Great Britain. At its zenith, China's GDP in 1820 dwarfed that of Britain, the leading European economy, and was nearly 20 times larger than that of the fledgling United States. Following the conclusion of the Chinese Civil War, the nation faced economic devastation. The defeated nationalists' retreat to Taiwan led to the depletion of China's liquid assets, including gold, silver, and dollar reserves, leaving the economy in disarray, with commerce crippled and the national currency rendered worthless. The People's Republic of China witnessed an unprecedented transformation from one of the world's poorest nations to one of its largest economies, achieved at a pace unparalleled in history. From 1949 until the onset of economic reforms in 1978, the economy operated under state control with limited market activity. Deng Xiaoping's reforms heralded a new era, propelling China to become the world's fastest-growing major economy, with average growth rates exceeding 10% over 3 decades. This economic model, often labeled as authoritarian capitalism or state capitalism, spurred rapid industrialization and urbanization, lifting hundreds of millions of people out of extreme poverty between 1978 and 2018. China's economic ascent was marked by a significant expansion in its manufacturing sector, evolving from basic industries like textiles to sophisticated sectors such as electronics and automobiles. With a burgeoning domestic market, extensive manufacturing capabilities, and advanced supply chains, China emerged as an industrial powerhouse, surpassing combined manufacturing outputs of several leading economies. Despite challenges, including the impact of the COVID-19 pandemic, China sustained economic growth, driven by export-oriented policies, a robust manufacturing base, and a sizable low-wage workforce. In 2020, China notably remained the sole major economy to register GDP growth, albeit modest, amidst global economic downturns. While facing climate change challenges and contributing to global greenhouse gas emissions, China's per capita emissions remain lower compared to developed economies like the United States. Looking ahead, forecasts suggest continued growth for China, maintaining its position as one of the world's fastest-growing economies, albeit amidst evolving global dynamics and environmental concerns. The economic system of China, as officially designated by the Chinese Communist Party, CCP, is referred to as the socialist market economy. Guiding the trajectory of economic development are the Chinese central government's 5-year plans, which outline priorities and policies. Currently, the implementation of the 14th 5-year plan, 2021 to 2025, is underway, with a focus on fostering consumption-driven growth and achieving technological self-sufficiency as China transitions from an upper-middle-income economy to a high-income one. The public sector occupies a central role in China's economy, aligning with the government's planning objectives of attaining the 2 centenaries milestones. These goals encompass achieving a moderately prosperous society by 2021 and transforming into a strong, democratic, civilized, harmonious, and modern socialist country by 2049, marking the 100th anniversary of the People's Republic. Despite substantial marketization since the initiation of reforms, state control persists over key sectors like infrastructure, telecommunications, and finance. Mechanisms enforcing this control include public property rights, extensive administrative involvement, and Communist Party oversight of senior management. State intervention is more pronounced in sectors where prices of goods and services hold social and political significance. For instance, the government exercises greater influence in commercial banking compared to private equity. State involvement in finance allocation, contracts, and resource distribution aims to mitigate market volatility. State-owned enterprises, SOEs, play vital roles benefiting the state, contributing to government revenues, employment, price stability, targeted industry support, and regional development. As of 2017, China boasts the highest number of SOEs globally, accounting for over 60% of market capitalization in 2019 and generating 40% of the GDP in 2020. Looking ahead, China is investing heavily in innovation and technology to position itself as a global leader in these fields.